Joining in right now, Gopal Sharda, the Group Chief Executive Officer at Kolte Patil, joins us on the show right now. Gopal, hi, morning. Good to have you. The weakness of the industry within the realty sector seems to have affected you as well. Despite a good sales momentum, your revenues have fallen this quarter. How would you explain that?
I think financial year 19 tracked a significant milestone in our corporate journey. We delivered 2.7 million square feet of pre-sales number, which is 28% higher than the last year. And also, if you see the collections, which has also gone up from 1100 to 1180 crore approximately. So I think for this financial year, we have delivered on all the parameters, the kind of guidance which we have given to the market. We have already delivered the pre-sales and collection number. As far as the profitability and the P&L is concerned, due to change in accounting parameters and accounting standards, I think the contract completion method is what we are following, wherein the only revenue deduction is coming post obtaining OC. So which is not giving a true and fair picture of exactly the overall operational performance. Having said that, as far as the percentage completion method, we have done 1150-80 crore sort of top line with an 121 crore PAT, adjusted 27 crore towards the debenture charged on the P&L. So otherwise the profit is around 142 to 145 crore, which is significant in this market, and I think we have delivered 12% of the PAT, and compared to last year, this is on the right track.
Margins have expanded despite the fall in revenue. What exactly would you attribute that to? And can you give us a sense as to what exactly is going to be your outlook on the margins? Do you think that you can maintain this sort of a trajectory of about 35-39% margin?
So I think for this financial year, last year the overall EBITDA was 21%, and this year we have closed 25% EBITDA. We have got a significant contribution from the projects wherein the selling prices on a higher side and high margin projects have been also contributed. So going forward, we are pretty confident that 27-28% sort of EBITDA margin can be maintained with an 11 to 12% PAT margin. And on a year-on-year basis, we can definitely look at 18 to 20% CAGR growth in all the parameters, and company is pretty much on track. In this board meeting also, we have signed and done the buyout of ICICI Venture, which is a significant milestone in the company history. We have increased our economic share from 60% to 90%, and going forward we see that this buyout will help to expand the profitability significantly, and that will be a good value creation for all the stakeholders.
Okay. Also wanted to understand, what about the demand trends that you're witnessing and whether or not there is an uptick in the affordable housing sector at all?
So I think as far as the overall market is concerned, there is a significant demand in affordable to mid market segment, and that's where you see the volumes are growing to the next level. Like last year we delivered 2.1 million, this year we have delivered 2.7 million, and the maximum contribution has come from affordable and MIG projects only. So going forward, the trend will remain like that, and I think it's more of a volume and cash flow market, wherein the branded developer has to grow by increasing their sales and production capabilities and take the company to the next level. So there is a huge demand, there is a huge support from the government towards this affordable housing scheme, wherein the Pradhan Mantri Awas Yojana schemes is there. There are benefits to the customer as well as to the developers. They are also looking for fast track towards the approval, improved regulatory overall environment. I think that is going to be a next level of growth for all the branded developers and organized and listed players who are focusing on protocol, values, ethics, overall corporate governance and hygiene check. So I think brand recognition is been well positioned in the market, and customers are also now preferring to the brands who are delivering their projects on time, and that's where the best time, because to grow to the next level. A lot of demand has also coming from cross sectors, maybe automobile, maybe other industries.
Right. I just wanted to understand there's a lot riding on your sector. There are a lot of expectations, particularly after that decisive verdict that has come in the elections. What is it that you are hoping to see in terms of reforms, in terms of a policy shake-up, and what is the outlook for the real estate space as a whole on the back of this?
I think first of all, this is a very good opportunity for the overall Indian market, wherein we see the stable government has come up with a majority and a clean sweep mandate. So whatever policies, reforms which were under process, which will be continued, and specifically government is also emphasizing giving focus to the realty sector as a whole. They are also trying to improvise the regulatory environment, wherein they are trying to focus on the ease of doing business, looking for the developers' current challenges and how they can give some sort of benefits to the developer, which ultimately can be passed on to the customer and take the industry to the next level, because the real estate industry is contributing significantly to the GDP growth of the country. And I think government is moving in the right direction, and we see lot of growth, and the sector is going to be a $1 trillion, $3 trillion sort of overall positioning in the market. So I think this is a very good time to plan aggressively and take the company to the next level.
We'll let you go on that note. Thanks much for joining in and sharing with us your outlook on the sector as well as your financials.